And then there we go. Webinar is recorded for those who couldn't make it today. So yeah, Bobby, this program is really awesome. I mean, tell me just a little bit about it, and let's dive into some of the details.
Sure. So thank you everybody for coming. We are really excited about this program. It's, sometimes they come out with programs for us and, they sound better than they are. This is one of the ones that, is what it sounds like. So we're really excited by it. So we'll jump in to, get things started, and we welcome your questions and your feedback. So basically this is what it sounds like. It's a home run cash offer program. It's funded by Harbor One Mortgage, and buyers can make cash backed offers to compete with all cash buyers while still obtaining the mortgage financing they need. Let's see if I can click properly. There we go. So what is it? So this is key. It's an optional paid service that allows prospective buyers to make conditional cash offers while seeking mortgage financing that doesn't need to be used. And it doesn't need to be used on every offer and doesn't change the loan term. So that's a big question we get. It does not change the rate. If you do use it, it's $499 due at closing. And it removes key contingencies and guarantees the purchase will close, which obviously is what the seller is looking for. So some basic parameters. We have to do a fully underwritten pre-approval, subject to just the property and minor credit conditions. Each buyer has to put a minimum of a 5% earnest money deposit down. The purchase cannot be contingent on the sale of a home, as we can't control what happens on that side of it. It has to, well, it can be a primary residence, second home, and investment property. So it has to be an existing single family or a 2 to 4 unit condo. And the purchase price cannot exceed $1 million because the valuation models don't work over that amount. What properties can't you do? So obviously certain condominiums, any condominiums that's not a 2 to 4 unit condo isn't eligible. Anything that we deem to be a foreclosure or short sale is not allowed. Anything that's new construction or pre-sale. So basically anything where there's no prior sales data, it can't be properly valued. Multifamilies aren't allowed at this time, so nothing 2 to 4 units. And then any property that doesn't meet Fannie Mae property standards. So this is for conventional financing only. It can't be a distressed property, things like missing kitchens and subflooring and things like that. The property does have to meet minimum Fannie Mae standards. And then any seller occupancy post-closing is prohibited. Even if it's paid lease back, that's not allowed.
Awesome. And we just, in looking at, the last 12 to 18 months, right? How many buyers are still out there that are pre-approved and looking that we've been keeping in touch with, and knowing those parameters and what can work and what can't work. It's the perfect opportunity this time of year to go through your database. The last, I've got people even the last 3 years that have been beaten out by cash offers. And this is pretty broad. I mean, yeah, you're talking conventional, at least 5%, down payment, but that's a low down payment option. So there's plenty of buyers out there that could really benefit from just having this conversation and maybe getting them motivated, reinvigorated to start looking again this year. And we all know that if rates keep coming down, the spring market's going to be just as crazy with low inventory, high demand, and rates hopefully on a decline, which will be a nice change.
Absolutely. So this is the workflow. Don't really get too concerned about it. It seems like a lot of steps, but it's really not. We'll take you through. So the first thing that needs to happen is a fully underwritten pre-approval, which quite frankly is the best pre-approval that you can have anyways. So we just send some documents like a loan application and to the borrower to have them sign it. And we get all their supporting documentation, bank statements, pay stubs, W-2s, those types of things. And we send it to the underwriter for review, just like a live loan would be. They underwrite it all. If there's any conditions from the borrower side, we take care of those up front. And we have a borrower that has really no contingencies other than property related. So the current turn times on a fully underwritten pre-approval are about 24 hours with a complete file, and condition review is about the same. They are prioritizing these for us. So we can have pretty good turn times. So once all that's done, they've completed the to be determined underwriting, and we have them sign the agreement up front too. We just add them to our system, which takes about 30 seconds. And new buyers are approved to participate in the program. They receive an email confirming their approval and outlining the basic cash offer details. This welcome email also includes a link to the cash offers pre-offer form, which is what we use to fill in the property information. And the realtor gets a copy of this email as well. Once we, put them into the system, this email usually goes out within 30 minutes. It's usually a lot less than that. So the pre-offer. So when the buyer would like to make a cash offer, they or their agent or their lender will first input the property and offer details via the portal link that goes out in that welcome email. For the first few, we'll definitely take care of this. You won't have to do it. So really all you're putting in is the property address, and we want to make sure that it's an accurate legal address, how much you're offering, and what the down payment is going to be. So at least the 5%. And the down payment amount isn't the earnest money deposit they're going to put. So if somebody's putting 20% down or whatnot, they're going to put 20% down, but they'll still only be required to put a 5% EMD or whatever you guys negotiate with the offer. So the form takes literally 1 or 2 minutes to complete. Review is typically within 30 minutes. It can occasionally take a couple hours, but the commitment for responding is within 12 hours. It's open 24/7. Most of mine have come back within 4 or 5 minutes. The only one that didn't was a mistake that I made in the input. So why is this form required? So we have a maximum purchase price of $1 million for all buyers, but we don't otherwise cap the amount that they may offer on a property. Because of this, we have to estimate an appraised value for every property to establish whether or not an appraisal gap is likely to exist at the planned offer amount and down payment amount. So the pre-offer form provides the information necessary for us to do this analysis. And then what happens is all the results of that analysis are compiled in a pre-offer summary email, and it's distributed to the lender and the buyer's agent.
So I think what's really cool, before you get into the appraisal gap piece here, just to kind of rehash, this is an optional service. So either way, your buyer gets pre-approved with us. We do a fully underwritten pre-approval. So that's going to give them a leg up anyway, right? When they're making offers against just regular pre-approved customers. And then if it's a property that seems like it's going to be extra competitive and they want to have this cash backed advantage, then they'd go ahead and do the pre-offer form. We'd already have that available. So it's kind of like the best of both worlds. They can certainly just go ahead and make an offer on a property without using the program, but they're fully underwritten and ready to go should they want to use it. And then what Bobby's walking through is the forms and the process for just how we determine that the property will be eligible for this home run option. And then as far as the appraisal goes, Bobby, you'll get into all of that. But that's usually the most common question that we get. Well, what about contingencies? What about appraisal? Is this really a cash offer? So that's what's up ahead. But again, it's just an optional service, and it's so great to have that advantage should things become competitive.
Yeah, and that cost, that $499 cost, which is, really, in our view, really affordable. It only comes into play if you use the program on an offer. It doesn't come into play just by registering for the program. So, and when I say use it for an offer, that means use it to get your offer accepted and you're closing under the cash-backed offer program. So that's the only time it comes into play. So what is an appraisal gap? So basically, if a buyer wants to bid over the home's expected appraised value, we may require an additional deposit called an appraisal gap deposit before signing the purchase contract. If necessary, these funds help ensure an on-time closing and are credited in full to the buyer as part of the standard closing. So basically, because our max financing on these is 95%, we need to make sure that whatever they're planning on borrowing and what we estimate the value of the property to be doesn't exceed that 95%. So if they're planning on offering, we'll get into hold on. So basically, these are the steps for it. So we do the automated valuation. So you submit the form, and then we use the address provided to conduct an automated valuation. It just uses data. You guys have probably all seen these. They're commercial, data valuations. And then that estimates what we expect the value to be. Then the maximum loan and minimum buyer funds are calculated. So based off of this estimated appraised value, the down payment amount and pre-approved loan amount, we calculate the maximum loan available and the minimum buyer funds necessary to complete the purchase. And then we determine whether there's an appraisal gap. So an appraisal gap exists if the minimum buyer funds are greater than the down payment. If this is the case, an appraisal gap deposit equal to the amount of whatever that gap is will be required.
So what the heck does that mean? Let's put it in
exactly.
a chart.
Here we go.
It's actually pretty simple. And
it
it's simple too, because you're ensuring basically you know what the appraisal is going to be before even going in on it, because all this work's done through the AVM.
Yeah. So here's an example. So if the buyer wants to offer $500,000 and they're making a 5% down payment of $25,000, that means that they're planning on borrowing $475,000. But if we estimate the home will appraise for $495,000, then we have to calculate what's 95% of that value we're expecting to establish the maximum loan amount, which is $470,250. So then we compare that, we compare the 475 that they want to take to, the 472.50 that they can. So basically, we determine that the maximum, the buyer funds required are the $29,750. So that's based off of our max available loan of the $472.50 compared to what they're going to try to buy it for, which is the $500,000. Their initial 5% down payment was going to be $25,000. So the difference between that is $4,750. So that difference is what we consider the appraisal gap deposit. So as a realtor, what you'll end up doing is you'll write up, the offer for $500,000, and you'll say the EMD is going to be $29,750. So this is a different sample. So basically, this is like a pre-offer summary email that you'll get, from everything. These have different numbers on it, but basically, if your planned offer was $475,000, 5% of that is the $23,750, and you're going to be told right up front that the appraisal gap deposit is going to be $2,197. So they're going to tell you it can't be any easier. It's going to say your total EMD on the offer is $25,947. And then they're going to say if you have to renegotiate for any reason at these different price points, these are your additional appraisal gap that you'll have to put in. So just so they know up front, if we want to offer more, we have to increase our deposit by this amount. This isn't the full email that you get. The full email that you get has notes on it, and it will also tell you exactly what the price point that they came up with as far as the expected appraised value. But I had to edit this because of privacy stuff that was also on there. But it's very simple. It gets handed right down to you. And this is where the optional comes in. So if you have a 5% down person that definitely doesn't want to put more than 5% down, and you come up with this scenario, then you're not going to use it. You're not going to use this program on that particular offer. So you'll just go ahead with your planned offer of $475,000 with your fully underwritten pre-approval, so you can still sell to the seller's agent that, hey, this buyer has already been fully underwritten. The only conditions outstanding are, appraisal and title. So that's still an advantage, to it. So how do you submit your offer? So the key is you're just going to draw up your offer as normal, including any appraisal gap deposit if necessary. And then you're going to attach the following that we provide to you in the email. There's an offer rider. This is part introduction to the home run program, so the seller knows what they're looking at. And then it's part offer summary. So it's very easy to read cover page to the cash offer program designed to stand out from the crowd and instill confidence. there's an addendum to the purchase contract. This document formalizes the agreement between buyer and seller. It's signed by the buyer, sellers, and home run representative. One of the key things in there is the fact that, yes, this is a cash-backed offer, but if the lender requires an appraisal, then the seller has to allow that appraiser into the house. And then there's a proof of funds letter. So obviously they always want to see a proof of funds letter on it. And so we provide one to show the seller that, there's money to buy this. I mean, it's being funded by Harbor One Bank, so locally people should feel comfortable with that anyways. So
and the goal
contingencies.
too, sorry, just to interrupt you again. The goal too is that we are not going to have to fund the purchase, right? The goal is that this is going to just go through as a regular purchase anyway, and the customers will get their mortgage and everything will be fine. But what's cool is that in the event of some delay, which we'll talk about later on when we talk about the closing process, then there's that cash backed offer part. So this is probably the coolest part that Bobby's about to go over, is just the contingencies and what the seller will actually see on their end.
Yeah. So financing and appraisal contingencies. So the cash offers are typically submitted without any financing and appraisal contingencies. This will maximize the competitive advantage, but it's not required. I mean, I think we all know that that's the way that it's effective, but we can't require them to waive those things, right? So, and then as noted in the rider and addendum to the purchase contract, even if appraisal contingency is waived, an appraisal, it should say may be conducted per the requirements. So the seller has to make the property available to the buyer for an appraisal. However, this is key. The sale will close regardless of the appraised value results. So the value doesn't matter from the seller side or the buyer side on whether or not the loan will close. And then the other contingency, so we don't require the buyer to conduct a property inspection, and any terms in the offer related to the property inspection are included at the sole discretion of the buyer. This includes things like, requiring inspection, waiving a home inspection, renegotiating the purchase price based off of the inspection results, or rescinding the offer based on inspection results. So it's just like any other offer at that point in time. So once you're under contract, underwriting proceeds per usual. And once the borrower has had their offer accepted by the seller, we have to be provided two important items. So we need to get a copy of the signed purchase contract, including the home run addendum. We collect and review the contract for every transaction involving the cash offer. Primarily, we're just making sure the terms in the contract match the terms in the offer docs that we sent out, and also confirming both the buyers and sellers have signed the addendum. And then we also need to get verification of the deposits, like the earnest money deposits and any appraisal gap. And we want to make sure that those amounts match what's listed in the offer docs. So when you're for your own purpose, it's really just one earnest money deposit. Like, you're not writing separate checks for like the EMD and then the appraisal gap. Like, it just gets combined into one, but we just want to make sure that that total matches. So most of these submissions we receive response time within 12 hours. Occasionally it can take longer. If there are any like mismatches, we'll go back and forth and just make sure we fix them with everybody. And we commit to responding to this in under 24 hours. Just know, while this is going on, there's no delays in everything else that's happening. It's just like when you're getting the purchase and sale signed and negotiating, attorneys negotiating, etc. Except we're probably more responsive than some of them that are out there. So we're still underwriting the property. We'll start appraisals when that's necessary, and same thing with titles and everything. So there's no real delays. So a lender appraisal. So once the cash offer is accepted, we'll go under contract and we'll conduct an appraisal if required. Again, the appraisal requirements are just what the Fannie Mae or Freddie Mac requirements are. So if it's 5% down, there'll definitely need to be an appraisal because those are the rules. If it's 10% or more down, it's a possibility that we get an appraisal waiver. And if there's an appraisal waiver, then we don't need, to do any we don't have to do an appraisal. So if the appraisal comes in at or above the purchase price and the buyer was required to put an appraisal gap deposit, that money can be applied to the closing costs and or refunded to them at closing. So they are not required to keep that as additional down payment. It's just there to protect us in case the appraisal came in low, as in this scenario we predicted with our automated valuation. If the appraisal comes in under our expected valuation, then we make up any difference, and the buyer doesn't need to put any additional funds into the transaction. So that's what we mean by the value doesn't matter to the buyer or seller once once we've done our automated valuation. So to be quite honest with you guys, this was my biggest concern going in. I was like, oh, those automated valuations are going to be super conservative. So we're going to have appraisal gaps all the time and yada, yada, yada. And we have not seen that to be the case yet. They've all, been, I don't want to say very generous, but they've all worked so far. So that's not to guarantee that they all will. But if they don't, and the buyer doesn't like the terms of what, those appraisal gaps are, then we just don't use it on that particular property.
And we've had some people that have asked, well, why are we even getting an appraisal done? Because we're using that AVM in the beginning, the automated value in the beginning. And again, just to reiterate, the goal is that this goes through as a regular mortgage, right? So the cash backed offer gets the offer accepted, and we have that as backup if needed. Harbor One will step in and fund the closing. But in 99.6 or something % of the scenarios, this is just going through as a regular mortgage. So we need that appraisal so that we can then, package it up like we do any other mortgage and send it on its way into servicing from there. So, but again, like Bobby said, what's cool is that the program relies on the initial automated valuation as far as actually putting it through and having the ability to waive the rest of those contingencies.
So closing. So there are 3 types of closings. The scheduled closing is just a standard closing, like in a regular real estate transaction where it closes basically at the date that was in the contract. An extended closing would be if a closing needed to be extended for some reason and both buyers and seller, agree to extend it. We all know the million reasons why that, can potentially happen. Or there's an alternative closing, which is where, most likely something happened to the buyer for some reason, and we step in and fund the purchase of the property. There's very few things that should happen to the buyer to cause something because we've already underwritten them up front. But it could be something along the lines of, unforeseen job loss, like right before closing. Then obviously we can't provide the mortgage, but we've guaranteed the closing to the seller, so the seller doesn't have to worry about that, and we go ahead and we'll fund the purchase. What's cool about something like that from the buyer side, not that anything's cool about losing your job, but we actually hold that property and try to work with them to close it to them later. Like we're not trying to step in and then sell that property. We're basically trying to facilitate the sale to that same buyer. So if it's somebody that lost a job, then hopefully they find another job, and then we get the documentation from that job, and then we can close it. But the seller's out of it at that point. I mean, you guys as the realtors are out of it at that point because your initial sale already closed, and we're just working with the buyer, to go ahead and facilitate that for them. So there is some protection, for them. So really, you want to give your buyers a competitive advantage. There's no reason not to get somebody in this program since it's optional. And there's no cost unless they use it, and it can provide a huge advantage. And if it's not for that particular property, it might be for the next one. And then on the flip side, like there's literally no downside to a fully underwritten qualified buyer, who has the option of making cash backed offers. So we are really excited about this because truly there's not a downside to it, to getting fully underwritten and into the program. And, like Lindsay said up front, we all have had buyers out there getting outbid. So if you guys have any buyers that have been around for a while and you're tired and they're tired of them, getting, outbid, especially by cash buyers, it's worth looking into this program and getting them into it.
Yeah, this has been a really cool reason to reach out to people. And again, I think just that first step of doing the fully underwritten pre-approval, I mean, that's huge. Like, then at least they have that advantage, gives them a step up anyway. And it's a great time of year to be reconnecting while people are working on putting their taxes together and all that kind of stuff. They're thinking about finances anyway. So yeah, that's the wrap there, everybody. And any questions that you have, again, we'll stick on for another couple minutes. Feel free to pop them in the chat, or you can give myself or Bobby or anybody else on our team a call. And we're looking forward to a really awesome 2024. We've got more webinars like this that we'll be hosting monthly or even every couple of weeks, just to talk about many new programs, strategies, scenarios that we have. And looking forward to putting together some really happy homeowners in the new year.
And if you have any subjects that you want us to cover, like please share those with us. And if we think that we can put something useful together, we certainly will.
Awesome. All right. Thanks, everyone. Have a great rest of your day.
Bye.